In March 2023, Donald Trump made a statement at Mar-a-Lago that went largely unnoticed by mainstream media, but deeply shook the gold markets. In his speech, Trump said, "We once had something called the gold standard. It was beautiful. We had real money. Now we have pieces of paper backed by nothing. This will change." Then, in an Iowa campaign speech in July 2024, Trump stated, "On day one, I will bring back sound money to America. The dollar will be strong again, backed by something real." Most analysts dismissed this as campaign rhetoric, but Trump does not speak in vain. And when you look at the names around him, Judy Shelton, who wrote a book advocating for a gold-backed currency; Robert Lighthizer, who believes the current monetary system favors China; Steve Bannon, who calls for economic nationalism, including sound money. The picture becomes clear. Trump is preparing to do what hasn't been done in 96 years: return America to a gold-backed dollar. And the target date is not coincidental: 2027. This is not just an economic policy. This is the largest wealth transfer in human history. A reset where the current price of gold will be revalued 10 to 20 times, trillions in debt will be wiped out, creditors will be ruined, and global power will shift from those holding paper dollars to those holding physical gold. And this will be justified not as an economic policy, but as a matter of national security. Because China and BRICS countries are preparing their own gold-backed currency to replace the dollar. Trump's reset is a preemptive strike, returning to gold before China does. Now let me show you exactly why Trump will do this, how it will work mechanically, the historical precedents proving this pattern repeats, who will become unimaginably rich, who will be completely ruined, and why 2027 is the most likely date for this reset that will end the dollar as we know it. Because this is not speculation. This is pattern recognition. Currency resets occur every 50 to 100 years. The last one was in 1971. So, it is 54 years overdue. Before I show you why Trump will return to gold, you need to understand what the gold standard actually is and why it ended. From 1879 to 1933, the United States operated under a classical gold standard. Every dollar could be exchanged for a fixed amount of gold at $20.67 per ounce. If you had a $20 bill, you could go to any bank and exchange it for 1 ounce of gold. This limited the amount of dollars the government could print. You couldn't print more dollars without the gold to back them. This prevented inflation and deficit spending beyond the state's tax revenues. However, in 1933, everything changed. The Great Depression had ruined the economy. President Franklin Roosevelt had to inflate the money supply to stimulate the economy, but he couldn't do it under the gold standard. Therefore, on April 5, 1933, Roosevelt issued Executive Order 6102. This order made it illegal for American citizens to own gold. Citizens were required to deliver all their gold coins, bullion, and gold certificates to the Federal Reserve at $20.67 per ounce. Those who did not comply faced a $10,000 fine and 10 years in prison. This was a confiscation. The government seized private property. Millions of Americans turned in their gold. And then, after the government collected the gold, Roosevelt revalued it. In 1934, the Gold Reserve Act set the new price at $35 per ounce. This was a 69% devaluation of the dollar overnight. Americans who turned in their gold at $20.67 watched the government revalue that same gold at $35. The government usurped $3 billion in wealth from citizens, and once gold was revalued, the government could print more dollars. This was fiat inflation. From 1934 to 1971, the United States operated under the Bretton Woods system. The dollar was backed by gold at $35 per ounce. However, only foreign governments could convert dollars into gold. American citizens could not. The system made the dollar the world's reserve currency. But the system had a problem. The U.S. was printing more dollars than the gold it could back. By 1971, foreign countries held $70 billion in dollar claims, but the U.S. had only $10 billion worth of gold. France was the first to realize this. In 1965, Charles de Gaulle announced that France would begin converting its dollar reserves into gold. He sent a French warship to New York to pick up the gold. Other countries followed. Gold was flowing out of Fort Knox. On August 15, 1971, President Richard Nixon went on television and announced that the United States was closing the gold window. Foreign countries could no longer convert dollars into gold. The link between the dollar and gold was broken. The dollar became a pure fiat currency backed by nothing. This was the Nixon shock. Without gold backing, the government could print unlimited dollars. From 1971 to 2024, the money supply increased by more than 3,000%. The dollar lost 98% of its purchasing power. What cost $1 in 1971 costs $7.50 today. However, what most people don't understand is this. The gold standard didn't end because it failed. It ended because it worked too well. It prevented the government from printing money to finance wars and social welfare programs. They removed the gold backing to print money freely. And for 54 years, they printed $36 trillion in federal debt and $300 trillion in total global debt. And now, this system is collapsing. Now let me show you why the current system is failing and why a return to gold is inevitable. The dollar's dominance depends on three things: global reserve currency status, pricing of oil in dollars, petrodollar, and military enforcement. All three pillars are cracking. The dollar's share of global reserves fell from 71% in 2000 to 58% in 2024. Countries are diversifying because the U.S. has weaponized the dollar. In 2022, after the invasion of Ukraine, the U.S. froze $300 billion of the Russian central bank's reserves. This showed every country that dollar reserves could be seized for political reasons. The lesson was clear: dollars are not safe. The petrodollar is dying. In March 2023, Saudi Arabia announced it would accept the yuan for Chinese oil purchases, ending the 50-year petrodollar monopoly. In December 2024, Saudi Arabia joined BRICS. BRICS countries are creating alternative payment systems, conducting trade in local currencies, and discussing a gold-backed BRICS currency. The petrodollar era is ending. Meanwhile, the U.S. debt burden is growing like a spiral. Federal debt is $36 trillion, about 120% of GDP. Interest payments alone are approaching $1.2 trillion a year. This is more than the defense budget. The government is borrowing just to pay the interest on previous debts. This is a debt vortex, and the only way out is inflation, paying off debts with devalued money by pressing the print button. And here is the most important data point. Central banks are buying gold at the fastest pace in the last 50 years. In 2022, central banks bought 1,136 tons of gold. In 2023, 1,037 tons. In 2024, over 1,000 tons. This is over 3,000 tons in 3 years, the highest level seen since the early 1970s, just before the Nixon shock. Who is buying? China, Russia, Turkey, India, Poland, Singapore. These countries are converting their dollar reserves into gold. They are preparing for something. Although China officially reports 2,264 tons of gold reserves, analysts believe the real number is between 4,000 and 6,000 tons. Russia increased its reserves from 600 tons in 2010 to over 2,300 tons by 2024. These are not random purchases. This is strategic positioning. China and Russia are preparing to back their own currencies with gold, and when they do, the dollar will face an existential threat. Trump is aware of this. Judy Shelton, whom Trump nominated to the Federal Reserve Board in 2020, has written extensively on the need to return to the gold standard. Robert Lighthizer believes the current monetary system favors China. Steve Bannon calls for a sound monetary system backed by gold. These are Trump's closest economic advisors, and they all support a return to the gold standard. Now let me show you how Trump will implement this. There's a historical roadmap. Roosevelt did it in 1933. Trump will follow the same path. Step 1. Declare a national emergency. You can't just declare an ordinary gold standard. You need legal authority. The president has this authority under the Trading with the Enemy Act of 1917, the International Emergency Economic Powers Act of 1977, and the National Emergencies Act of 1976. Roosevelt used these to justify Executive Order 60-102. Trump would do the same. The justification will be national security. Trump will claim that China and BRICS countries are preparing a gold-backed currency to destroy the dollar. If the United States does not take the first step, the dollar will collapse. This is an economic Pearl Harbor attack. The president must act immediately. This framing makes opposition seem unpatriotic. Step 2. Gold confiscation or restriction. While Trump may not confiscate gold as aggressively as Roosevelt did, he will certainly take the path of restriction. An executive order will likely prohibit Americans from holding more than, say, 5 ounces of gold per person. Any gold above this must be delivered to the Treasury in exchange for dollars at the current market price. Why confiscation? Because the government needs gold to back the currency. The United States currently holds about 8,133 tons of gold. At $2,000 per ounce, this is worth about $520 billion. However, the U.S. money supply is around $21 trillion. The government either needs more gold or must revalue existing gold at a much higher level. Confiscation allows for more gold. Revaluation makes existing gold cover more currency. Step 3. Massively revalue the gold. After seizing or acquiring the gold, the government will declare a new fixed price for gold relative to the dollar. It won't be $2,000 per ounce. Let's look at the math. The U.S. has about 8,133 tons of gold, which equals 261 million ounces. At $2,000 per ounce, it's $522 billion. At $10,000 per ounce, it rises to $2.61 trillion. And at $20,000 per ounce, it makes $5.22 trillion. If you want to back 25% of the $21 trillion money supply with gold, you need about $5 trillion worth of gold. This means the price of gold must be approximately $20,000 per ounce. When revaluation occurs, the price of gold doesn't rise gradually. It leaps overnight. The government announces the new price. Gold miners, gold investors, and gold-holding countries all see their wealth increase 5 or 10 times instantly. This is the largest wealth transfer in history. While gold holders grow rich, dollar holders lose their purchasing power. Because as gold is revalued, the value of the dollar drops. A dollar that used to buy 1/2000th of an ounce of gold can now only buy 1/20,000th. The dollar's value has been reduced by 90%. Step 4. Restructure the debts. This is the hidden purpose behind this reset. The United States government owes $36 trillion. At current rates, this debt is unpayable. However, if you devalue the dollar by 90%, debts can be paid with a cheaper currency. While the government still nominally owes $36 trillion, in terms of real purchasing power, that $36 trillion is worth only $3.6 trillion in pre-reset dollars. Debt is melted away through inflation. Who are the creditors? Foreign governments, central banks, pension funds, insurance companies. China holds $800 billion in treasury bonds, while Japan holds $1.1 trillion. If the dollar loses 90% of its value, these countries lose 90% in real terms. Their debts are paid nominally, but with a worthless currency. This is a de facto default without the legal stigma of a default. Step 5. Implement the new gold-backed dollar system. After confiscation, revaluation, and debt restructuring, the government announces the new system. Every dollar is now backed by a fixed amount of gold worth $20,000 per ounce. American citizens cannot exchange their dollars for gold. Only foreign governments can, and only under strict conditions. This is Bretton Woods 2.0. The dollar is technically gold-backed, which restores confidence. This 5-step process can happen in less than a year. Declare emergency. Give citizens 90 days to turn in excess gold. Revalue gold simultaneously. Restructure debt through inflation. Implement the new system. By the end of 2027, the dollar becomes gold-backed. Debt was melted by inflation, and America reset its economy on the backs of creditors and dollar holders worldwide. Now let me explain why 2027 is the most likely date. Historical currency resets follow specific patterns. The last major reset was the 1971 Nixon shock. Before that, There was Roosevelt's gold seizure in 1933. This pattern spans 50 to 100 years between major resets. From 1971 to 2027 is 56 years. From 1933 to 1971 is 38 years. From 1879 to 1933 is 54 years. The average is about 50 years. Our time is up. Secondly, 2027 is exactly 100 years after 1927, the peak of the 1920s bubble before the 1929 crash and the 1933 reset. Historical cycles often repeat at century turns. Thirdly, Trump's second term will run from January 2025 to January 2029. The midpoint is 2027. Major and controversial actions usually happen in the second or third years when political capital is highest. For a second-term president who cannot run again, 2027 is when Trump will have the highest impact. Fourthly, by 2027, the dollar crisis will have sharpened. Federal debt will exceed $40 trillion. Interest payments will approach $1.5 trillion. The BRICS currency, expected to launch in 2025 or 2026, will begin to spread. The crisis will become undeniable. Emergency actions can be politically justified. Fifthly, Trump's reset must preempt BRICS. If BRICS launches a gold-backed currency first, the dollar loses. The timing will be just before or after the BRICS launch, late 2026 or early 2027. This is a financial war. Whoever moves first wins. All these factors point to 2027, and if you understand this pattern, you can position yourself before the event occurs. Because when the reset is announced, it's too late. Now let me show you who wins and who is destroyed. First, gold owners gain immense wealth. Anyone holding physical gold before the reset becomes 5 to 10 times richer overnight, as gold is revalued from $2,000 to $10,000 or $20,000 per ounce. But there's a problem. If gold is confiscated, your gain is limited to the state's payment rate. Gold miners win. Companies that mine gold see their reserves revalued overnight. A gold deposit worth $100 million at $2,000 gold reaches a value of $1 billion at $20,000 gold. Stock prices explode. Companies like Barrick Gold, Newmont, Franco-Nevada could see 10 to 20x gains. Countries with large gold reserves win. Russia's 2,300 tons of gold are worth $150 billion at $2,000 per ounce. At $20,000, it becomes $1.5 trillion. China's hidden reserves, if they are 5,000 tons, rise from $320 billion to $3.2 trillion. These countries gain massive geopolitical leverage. Tangible asset owners win. Real estate, farmland, productive businesses, everything real retains its value. If you have a house worth $500,000 and the dollar loses 90% of its value, the nominal price of the house rises to $5 million. But if your fixed-rate mortgage is still nominally $300,000, that is worth only $30,000 in real purchasing power. Your mortgage effectively disappears. Your asset retains its value. So who loses disastrously? Dollar holders. Anyone with cash, checking accounts, or savings accounts. When the dollar loses 90% of its value, you lose 90% as well. If you have $1 million in cash, its purchasing power drops to $100,000. Bondholders are ruined. U.S. Treasuries, corporate bonds, any debt in dollars. You lent dollars. You get paid back in dollars. But those dollars are now worth only 10% of their previous value. A 10-year Treasury bond paying 4% annually looked safe. But if the dollar loses 90%, your bond is worthless. Foreign creditors lose the most. China, Japan, and European countries holding Treasury bonds accumulated these reserves through decades of trade surpluses. Now, their $2 trillion in reserves drops in real terms to $200 billion. This is the largest theft in history. Pension funds, insurance companies, and retirees lose. These institutions hold massive bond portfolios. When bonds lose 90%, pension funds go bankrupt. Retirees expecting $50,000 in annual income find that their income buys what $5,000 used to. They cannot work. They cannot rebuild. They are destroyed. The middle class is hollowed out. Most of the middle class's wealth is in dollars, savings accounts, and retirement savings invested in bonds. The middle class, which spent 40 years saving for retirement, sees those savings evaporate. Society splits into wealth owners and others. This is the new feudalism. Now let me show you the geopolitical dimension. Trump's reset with a return to the gold standard is not just an economic policy. It is a financial war waged against China and BRICS. Since 2008, China has been working to deactivate the dollar. China founded the Asian Infrastructure Investment Bank, launched the Belt and Road Project, developed CIPS as an alternative to SWIFT, and is accumulating gold faster than any other country in history. This is preparation for a gold-backed currency to replace the dollar. In 2023, BRICS expanded. Saudi Arabia, UAE, Iran, Egypt, and Ethiopia joined. Currently, BRICS covers 45% of the global population and 36% of global GDP. And BRICS announced plans for a common currency backed by gold and commodities. This currency will be used in international trade among BRICS countries. The need for the dollar will disappear. This means the end of dollar hegemony. If BRICS launches a gold-backed currency and the dollar remains pure fiat, the direction of international trade changes. Oil producers prefer the BRICS currency. Within 10 years, the dollar loses its reserve currency status. The U.S. can no longer print money and export inflation. The American standard of living drops by 30% to 50%. This is an existential threat. Trump's reset is a preemptive strike. If the U.S. returns to gold backing before BRICS launches, the dollar regains its credibility. Trump can say, "We brought back sound money. Trust us, not China." This weakens BRICS power. The U.S. maintains its reserve currency status, but through the gold standard instead of fiat. However, there is an even darker possibility. The reset is a trap. The U.S. returns to gold. It raises the value of gold to $20,000 and invites the world to trade with the gold-backed dollar. Other countries begin accumulating dollars again. After making the world dependent on the dollar, the U.S. suspends gold backing once again, just as Nixon did in 1971. It uses gold backing to restore trust, then removes it. This would be the greatest deception in history. China and Russia understand this. They won't fall for this trap. They continue to build alternative systems, and the world splits into two separate monetary systems, the dollar zone and the BRICS zone. A Cold War economy, competing currencies, financial war. Every country is forced to choose a side. Now let me offer a timeline of how this will unfold. 2025, Trump takes office. The first year is spent with appointments and urgent crises. Trump's economic team begins studying the implementation of the gold standard. No public announcement is made yet. Markets remain calm. 2026, the dollar crisis intensifies. Federal debt exceeds $40 trillion. BRICS announces its gold-based currency will launch in the fourth quarter of 2026. Many oil-producing countries announce they will accept the BRICS currency. The dollar share in reserves drops below 55%. Treasury bond yields skyrocket. The Fed prints money to buy Treasury bonds, accelerating inflation. Trump uses this crisis to justify emergency action. Late 2026 or early 2027, Trump declares a national economic state of emergency. In a televised address to the nation, Trump explains that China and BRICS have issued a gold-based currency to destroy the dollar. Trump signs an executive order restricting gold ownership, temporarily freezing convertibility, and preparing to return to the gold-based dollar. Markets panic. Gold jumps 50% within a few days. The government suspends gold trading. Banks close for a week-long bank holiday. Mid-2027, after the bank holiday, banks reopen. The Treasury clears its throat and announces the dollar is now backed by gold at $15,000 to $20,000 per ounce. Private ownership is limited to 5 ounces. Anything above this must be sold to the Treasury. The deadline for compliance is 90 days. Failure to comply results in seizure and criminal sanctions. Late 2027, the transition is complete. The dollar becomes gold-backed. International trade resumes using the new dollar. Some countries accept it, others refuse, using the BRICS currency instead. The world is divided into two separate monetary zones. Inflation rages in the short term as prices adjust. Workers protest. Riots break out. However, the economy slowly stabilizes. Debt is greatly reduced in real terms. The reset is complete. So what do? How do you position yourself? You have limited time. Here are strategies based on historical examples. First strategy, buy and store physical gold. If confiscation occurs, the gold you surrender is compensated at pre-revaluation prices. Gold you hold illegally and successfully hide is valued at the full revaluation rate. In 1933, some Americans got rich by hiding gold. This is illegal and risky. But historically, if you don't get caught, it provides the highest return. Second strategy, buy gold outside U.S. jurisdiction. Buy gold stored in allocated accounts in Switzerland, Singapore, or other countries with strong property rights. If the U.S. seizes domestic gold, your gold abroad remains safe. This is legal and lower risk. Third strategy, buy gold mining stocks. Miners benefit from revaluation without the risk of confiscation. Own shares of foreign mining companies operating outside U.S. jurisdiction. Canadian miners, Australian miners. These are safer from U.S. nationalization, but benefit from gold's revaluation. Fourth strategy, buy tangible assets and borrow against them. Real estate with a fixed-rate mortgage, farmland with a loan. You borrow dollars today. After the reset, you still have a dollar debt. But those dollars are now worth only 10% of their previous value. Your debt disappears. Your asset retains its value. Fifth strategy, hold foreign currencies and assets. Swiss franc, Norwegian krone, Singapore dollar. Currencies backed by strong economies. Also, invest in foreign real estate and foreign stocks. Diversify away from dollar risk. Sixth strategy, build survival reserves. Food, water, fuel, medicine. If the reset triggers bank runs and supply chain disruptions, having physical necessities could be life-saving. Every currency reset brings temporary chaos. These strategies are not financial advice, but they are strategies that worked in 1933 and 1971 based on historical models. Those who held tangible assets and gold survived. Those who held paper were destroyed. Let me end with this. Trump's return to the gold standard is not certain, but the probability is high. The dollar is failing. BRICS is rising. Debt is unsustainable. Historical cycles point to 2027. Trump has advisors who support this and the political incentive to do something dramatic. A return to gold would cement his legacy as the president who saved the dollar, restructured the debt, and defeated China's monetary challenge. Whether Trump intends it or events force him, the reset is coming. 2027 is the most likely date. Gold confiscation or restriction. Revaluation to $10,000 to $20,000 per ounce. Debt restructuring through devaluation. Implementation of the gold-backed dollar. Justification via national security emergency. This will be the largest wealth transfer in history. Those who foresee this and position themselves correctly could increase their wealth tenfold. Those who don't will lose 90% of their wealth. Roosevelt did it in 1933. He seized gold and revalued it 69% higher. It worked. Nixon did it in 1971. He implemented the gold link and devalued the dollar. It worked. Trump will do it in 2027, and if history is a guide, it will work. America will survive, but transformed. The Great Reset is not a conspiracy theory. It is a historical pattern. Currency resets happen every 50 to 100 years when debt becomes unsustainable. We are at that point. The reset is coming. Trump may be the one to do it because the math no longer adds up. Debt cannot be paid with honest money. It can only be paid with a devalued currency. This requires a reset. If this documentary showed you a pattern you've never seen before, if you understood that 2027 fits the historical pattern perfectly, then you have a choice. Ignore it and hope it won't happen, or prepare. Buy gold, acquire tangible assets, reduce your dollar risk, and position yourself for the greatest wealth transfer in history. Trump's plan to bring back the gold standard is what lies hidden behind the 2027 reset. The pattern is clear, the timeline is set, and the mechanisms are documented. All that remains is execution, and when it happens, the world will change forever. Those who are prepared will prosper. Those who are not will become poor. The reset is coming. Trump knows. China knows. Now you know too. What you do with this knowledge will determine your financial future. Welcome to the largest monetary transformation since 1971.